Welcome to TheoTrade. This is Don Kaufman. Here we are. It's May 15th, 2017, doing the Theo Night video. Just moments after the close, the S&Ps, well, what do they do today? The same thing they have been doing, grinding ever so slightly higher today. But, you know, today's one of the trading days I just want to elaborate upon for a moment. You don't want to read too deeply into the S&Ps having ground higher today. It has been just an incredibly, first of all, the volatility, docile, really low volume day. Not, for those of you that do trade on an intraday basis, this is not exactly the kind of day that dreams are made of, right? It's, again, low volume, low volatility out there. You know, as we actually watch the trading day kind of progress, and yeah, there's those of us that do sit in front of the screens for, 6-7 hours of the day. I think I'm on my 8th hour right now, but the vast amount of today's trading session, and again, was right in this kind of relative trading range. And let's put this trading range into perspective from, again, from just after the cash open here, 15 minutes into the trading day. What did we see? I mean, really, you had about a 3-point trading range. That's it, and that's inside of the S&P futures. So what else really happened today? And the answer is, well, musical chairs kind of progressed a little bit more today as well. And if you guys have not been tuning in kind of day in and day out, what I'm kind of calling musical chairs, it's just been this rotation of capital. So the single most important stocks recently have really been, your Apple and your Amazon, both ending up on a percentage basis today slightly lower, not noticeably lower, slightly lower, like, 0.3%, even though the market's actually ground higher. So today we actually saw, and again, this case of what I call musical chairs, capital coming out of Apple, coming out of Amazon. And what are they doing? Okay, let's tuck it into Google right now. All right, Google was negligibly higher here. And again, frankly speaking, Google hasn't done a lot in the past couple of trading sessions, although it did hit an all-time high today. When I say it hasn't done anything, it hasn't done anything. What have you done for me lately? Nothing inside the last 2 weeks. But today, capital then went flowing from a couple of the tech stocks back into the financials. Okay, the financials actually caught a bit of a bid today. And again, this is this capital rotation. So we decided to buy financials today. That wasn't that exciting. And based on some news about oil, energy was the hot hand today. So energy out of the gate this morning was up almost 1.5%, and it actually faded on the trading day. Okay, so the markets, yeah, they ground a little bit higher, but interestingly enough, today it wasn't done on our marquee stocks, Apple, okay, Amazon, which those two have really been kind of the usual suspects. So in the coming days, like, is this it? Is this it for technology? Again, not necessarily sure yet. I would watch Apple, Amazon very carefully. And when people constantly ask that, and that's probably the #1 email that I get, when are we going to know, like, when the market is eventually going to break? And it'll be unquestionable, right? You'll have a stock like Apple that'll be down, $3-4 on a day. When you start seeing substantially larger percentage moves, again, what we're actually trapped in right now, this 0.2%, 0.3%, this is really some of the lowest volatility that anybody has ever seen recorded out there. Okay, and it's not just, it's a low VIX, here or there. This discussion isn't about the low VIX. It's about every equity product pretty much that we trade. Now, as I was saying, with something like Apple, on a percentage basis, you'll know it when one day this thing comes ripping back down to 150 or 151, when technology no longer is like the in or the vogue product out there. So let's kind of continue on along this theme over here. One thing I'll tell you that really is working is some of the intraday trade setups that we're doing right now. And listen, not everybody that tunes in on a day-to-day basis per se trades on an intraday basis. Like, intraday trading is not for anybody. You have to have the time to actually put forth and a little bit of effort, not only learn about intraday trading, but to sit there and actually trade at an intraday basis. So one of the things that's working really well lately is using these kind of week-to-week expected moves. Now, the expected move, again, for this trading week, I'll remind everybody, you can go, if you're on thinkorswim, you can go over to the Analyze tab, and you can pull up previous trading sessions. So what I like to do is I usually go back to like Saturday, and I would look, and I'd say, what does this week hold in store for us? And it's about a $23 expected move. So about a $23 expected move, okay? That's the expected move for the entire week. Now, in addition to it, so I want you to remember that the entire week, does it mean that we can't move more than $23? No, but you start to get a decent likelihood of the market coming in if we were to exceed, all right, the upper or lower, for that matter, expected move. Okay. Now I want you to think about this for just a moment. So here we are at, 23.91. That's where we started the week. We rally, all right, today to 24.04. The upper end of the expected move is about 24.13. So I'm only about 10 points shy of the upper end of this expected move. If we actually hit the upper edge of this expected move, okay, maybe the next day or two, we may have a tradable, okay, way to say like, all right, let's fade this move. And fading the move would mean get short more up here. Maybe we'll fade back into it. Now, not only have we been doing this, and again, I want to elaborate upon this because it's such an important concept. Not only are we doing this like on a full week basis, but we're also doing this on an intraday basis. And it's been working quite nicely on an intraday basis. When I say an intraday basis, if I go back over here to the Analyze tab, look at the expected move. Now this is on Saturday, right? But look at the option chain. First of all, there's a Monday option now, there's a Wednesday option, okay, and a Friday option. Now again, Monday, Wednesday, Friday expiration. Well, the Monday expiration does carry some weight, and there was about a $10.25 expected move. Okay, so in today's trading session, we rallied just about $10. So what do you think we did on an intraday basis? Okay, you can go out and you can actually short, all right, into the fact that we've already rallied up $10. So on an intraday basis, the expected move becomes relevant, right? We shouldn't explode beyond the expectation. So it gives us opportunity at that point to get short the market, again, on an intraday basis. And you don't necessarily have to use the SPX. Just because the SPX is what the expected move pertains to, you could go out there and you could use spider options, you could use S&P futures. But if you take a look at this, I know what people are immediately thinking. They're like, wait, Don, come on. The expected move was $10.25. The SPX moved $11.42. Yeah, well, the reality is it's still open for the next 5 minutes. The options in the SPX are still open for the next 5 minutes. And what's interesting is the markets have strived on an intraday basis to come back inside of these expected moves. And once again, here we are, and we're just minutes after the close. Now remember, index products are in fact open after the close. The options on the S&P futures, are open. The SPX, even though the SPX, okay, when you look at the product itself, you're like, the net change is not moving. Okay, yes, but the options continue to trade, okay, relative to after the close. Now, it's very, very important that you know this because, again, markets kind of go out of their way to come back inside the expected move, all right, literally into the close. Effectively, the move today was about $10. Now, this was not per se a wildly profitable idea today, but this is something that you can actually build on. You know, people are constantly looking for ideas like support and resistance. I mean, they'll rely on a MACD, a Fibonacci, a Bollinger Band, but when you start looking to the charts, anything that you're looking at in the chart is based on past data. The expected move is actually based on trade that has skin in the game. It's based on volume. It's based on price of the options, okay? And what it's really based on and why markets are moving to the expected moves, it's based on hedging activity. Now, this is something, again, we've talked about a lot recently here at TheoTrade, a lot in our chat room, a bunch of classes about expected move. But I got to tell you, in a marketplace lately that has been relatively bland, okay, and to say relatively bland, all right, listen, this is not an understatement. Here's the last 30 days of trade and one of the tightest ranges ever recorded. Okay, and it starts pretty much right here. This is one of the tightest ranges ever recorded inside of the S&P futures, right there. Okay, we're now, and again, this started ultimately on April 24th. We are now 3 weeks into, okay, approximately a 10-point range. The most wild range has been what? Maybe 20 points inside of the S&Ps, which, if you think about it, on a $2,400 product, a 20-point move is almost a rounding error, and yet that's all we can move. So it becomes relevant more and more often to be looking at these expected moves, not only on a day-to-day basis, but a week-to-week basis, because people, which driving trade right now is minimal, but it's hedging activity. And hedging activity is locking us in a very, very tight given range. Moving forward, again, gave you a couple ideas as the week progresses. Generally speaking, the week feels what? A little boring, a little bit docile out there. Yeah, it does. That was the beginning of the week. Nevertheless, we had a couple of key technology products fade. Watch your Amazon, your Apples, your Facebooks, okay? Even your Microsoft in the coming days. These are the market caps that matter. And if the Nasdaq does start to crack, okay, that's when you look to really, get short, stay short, be short. Thanks everybody for joining us here at TheoTrade. Join us all this week in the TheoTrade chat room. Have a wonderful evening. Bye-bye.